Disney reported its fourth quarter numbers last night, and the stock is off almost 5% this morning after missing Wall Street expectations and disappointing streamer subscriber numbers as well. Joining us right now to talk more about it is Tom Rogers, Engine Media Executive Chairman, the former president of NBC Cable and the founder of CNBC. Of course, he's also a CNBC contributor. And Tom, let's talk about this. There's a lot of focus on Disney today. The upside had been all of those strong subscriber growth they got for Disney Plus during the pandemic. Downside is, look, that growth has really dried up to a huge extent. What do you think that means for the stock?
Well, first, let me say Happy Veterans Day and a shout out to my 95-year-old dad, ex-Marine and Korean War vet. I think Disney's earnings are not quite time to call into Marines, but they got a lot of issues here. Look, this is a stock that has traded off of a headline number, their streaming sub number. And that streaming sub number for the last few quarters has really been driven off of Indian Hotstar subs, which are really cheap subs. But what was very apparent last night is that this is a function of cricket in India, much more than it is a function of Disney Plus. And as I have said all along, as a result of that, this is no way to measure the success of the Disney streaming service. It wasn't the way for investors to look at it when those numbers were going up. And last night with the Hotstar numbers not only not contributing but declining, it's no way to measure the success when those numbers go down.
Well, what is the way to measure the success if we can't look at the subscriber numbers?
Well, the way to look at it is, one, the amount of engagement they have, two, the revenue per sub, three, the extent of their program budget going to streaming, four, how much of their movie shoulder they're really putting behind the streaming service. Those are far more important to their overall success than this headline number driven by Indian subs. Now, I will say, I got to get this off my chest about Disney, and this is probably the quarter to say it. This is a company with a market cap of $300 billion, driven off of headline number of subs, mostly Disney Plus subs. And we have no idea every quarter how many U.S. Disney Plus subs there are. Ultimately, analysts piece that together. But they aren't there talking about Disney Plus domestically. We know it for Hulu because it's a U.S.-only service. We know it for ESPN Plus because it's a U.S.-only service. But here we are not knowing how many subs they get from the Hulu, ESPN Plus, Disney Plus bundle. We don't know what the U.S. domestic growth is. And when you reiterate 230 to 260 million as your number,
by
without
2024,
knowing
right?
For 2024, exactly, without knowing what percentage of those ultimately are going to be these Asian Hotstar 50-cent subs, or to what extent the percentage is really going to be comprised of U.S. subs, I don't put a lot of weight in them reiterating that number.
Shepard Smith here. Thanks for watching CNBC on YouTube.